In this presentation, we will continue on with our comprehensive proprietorship problem. We're going to be recording transaction on January 18th. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Into our new, nice, clean general journal here. On January 18th, we have paid vendor for supplies purchased on January 5th. So let's first go through our starting questions before we think about that too much and see if we can get as far as we can go, and then we'll get back in there and dive deeper. So first we're going to ask our question, is cash affected? And all we need to know for that is this, it says paid, and that we pay with stuff with cash typically. So that would be an indication that cash is affected, it's going down. So we're going to say cash is going down, cash is a debit balance account, we're going to make it go down, doing the opposite thing to it, a credit. So I'm going to right click and copy cash. We're going to put that on the bottom of the journal entry. So I'm going to put that in cell H6, right click and paste, 1, 2, 3. Notice we're not building from top to bottom, left to right, debits to credits. We're going to build in whatever way is easiest. And cash is typically easiest. That then is where we start. We're going to go to the home tab up top. We're going to go to the alignment group and increase the indenting. Probably done for you already, but that's where that is. Nice to know where it is. We're going to put this on the credit side, and the credit will be for the amount of negative 5,000, negative representing credits for our worksheet. We're going to put the debit on top. There's going to be some type of debit, negative of this number, a little formula to do that. You could just type in 5,000. I suggest using formulas whenever possible, and will do so going forward. So we can do all that just by seeing the word paid, really. And now we can say, well, we paid a vendor for supplies purchased on the past, or purchased on January 5th. So, in other words, why are we paying someone? Well, we bought supplies. So, did we debit supplies? No. Why? Because we bought the supplies in the past. We bought them up here. So, up here on January 5th, in other words, we purchased supplies on account. Now, we could go back here and look at that journal entry and see what happens, but what happened is that we got supplies. We increased the supplies by that 16,000, and then we decreased not cash, but we increased the liability. So cash didn't go down, the good thing didn't go down, the bad thing went up. This 16,000 was a result. We're paying off some of that now. So this account here, accounts payable, represents 16,000 worth of supplies we bought on account, hadn't yet paid for. Now we're paying 5,000 of it, and therefore this liability is going down. I already have the debit, but let's double check it. This is a credit. We need to make it go down. How do we do so? We do the opposite thing to it, which is a debit. So that makes sense. So we're going to copy the accounts payable, right clicking and copying, put that up top in cell H5, right click and paste, 1, 2, 3. We have now journalized or made or recorded the journal entry into the general journal, this blue area, and we'll now go to the process of posting to the general ledger on the right side. To do that, you could make things really small by making things small this way, so you can see everything over here at the same time, or you can just scroll back and forth. I'm going to go back to 130% and show you the freeze panes. So we'll do it with the frozen panes. Here's how we are doing it here. So I'm going to go to the right so we can't see column A. G now is flush with the side. I'm going to put our cursor in cell K1. That's important. Then go to the View tab up top. We're going to go the View tab, not Review. And then go to the Windows group. I was talking to it. Okay, and then the freeze panes and freeze panes. There we have it. Now if we go to the right, we have frozen panes in cells or columns G through J. And that's what we want. That's nice. That's what we're looking to do for. So here we have the accounts payable up top, our first transaction. Here's our accounts payable on the trial balance. It's going to be in the same order on the GL. So we're going to go to the right until we find it. So we've got our assets. We've got our liabilities. And our first liability looks like it's down here. There it is, accounts payable. We want to be on the debit side this time. So here's a debit. We want to be on the debit side. We're going to have to scroll up just a little bit to record this. That's okay. We're in cell W22. Within cell W22, we say equals. Scrolling up just a bit, and we're going to pick up that 5,000 and enter. So the 16,000 going down by 5,000 to 11,000. We now see that 11,000 on our trial balance as well. If we just click to the left of the frozen panes and go right with the keyboard, there is the 11,000. We are now out of balance by 5,000 until we record the other side, as we'll do now, that being to cash. Here's the cash on our journal entry, on our general journal. Here's our cash on our trial balance. And it's going to be the first account on the GL as well. So I'm going to go to the right so it's flush or as close to our journal entry as possible. We're going to be on the credit side. We're in cell P13. In cell P13, we're going to say equals. Point to that 5,000. We're at a $31,000 balance. This is the credits. Get the opposite thing to it, bringing our balance down by 5,000 to 26,000. That 26,000 then, of course, can also be found on the trial balance. There's our 26,000. We are now back in balance here. Debits equaling the credits. No effect on net income. What happened here? We paid cash, but it didn't decrease any expenses. All it did was decrease a liability. Now, you may be thinking, well, man, we bought supplies and it didn't decrease, we didn't expense it. It didn't decrease the net income at the point in time that we bought it. And now we even paid for it, and it didn't decrease the net income at the time we paid for it. When is it going to decrease the expense? When we use it, when we consume it. And we're going to know that when we do the adjusting entries. We'll treat supplies kind of like we would inventory. We'll count it to decide how much we have consumed and used, and then we'll expense it in accordance with the amount that we have consumed. So it's not the point in time we bought supplies. It's not the point in time that we paid for supplies that triggers the expense, but the point in time that we consume the supplies in order to help us generate revenue in accordance with the matching principle. So if we look at what we have here now, notice our assets, if we add them up, we're at 126,000 now. Of those assets, we can think about it if we liquidated the company. The equipment, we can get 60,000 for. Prepaid insurance, we can get 12,000 for, possibly if we can turn in our policy, and 16,000 supplies, and accounts receivable 12,000. Now, again, these types of things, we may not be able to get that much money if we liquidated the company, but in theory, we could. And that's going to be the point. So in theory, on a book basis, we have 126,000 at this time. And of that, we owe 11,000 to 3,000, 14,000 to the third parties. And therefore, these assets of 126 equals the liabilities and equity 126. So of this 126 assets, we owe these liabilities here, and the rest of it is owed to the owner. So all the blue accounts is owed to the owner. So remember, assets minus liabilities, 112,000, is what is owed to the owner, which is really all of these blue accounts represent equity. This represents total equity, what is owed to the owner. The book value of the company, assets minus liabilities, 112,000. For more accounting information and accounting courses, visit our website at accountinginstruction.info.